Hello everyone. We know that accounting is a language based on which we read the financial statement, and golden rules of accounting is the backbone on which the whole accounting is built. And we know that each transaction we convert into a journal entry. This journal entry has two parts, a debit part and credit part, and the total of debit must be equal to total of credit. This is the heartbeat of accounting, and this accounting can be classified into personal account, real account, nominal account. These two belongs to balance sheet and this is P&L. Personal means it denotes to a thing, means person, entity, or a organization. That's why debit the receiver, credit the giver. Real account. A real account means it may be computer or any cash, or it mostly denotes to asset. The rule will be debit what comes in, credit what goes out. Nominal. Nominal it's referred to P&L. Why it's called as nominal? Temporary. Because P&L we prepare for a period. Whatever loss or gain is there, we add to the equity under the balance sheet. Hence, it's called as nominal. So we debit expenses and loss, we credit income and gain. But the credit is negative. But why this negative give to income and gain and positive the debit gives to expense and losses? Let's understand the balance sheet. Then we can answer to that question. When you read the balance sheet in your mind, asset will be plus. Whenever there is an increase in asset, means it has to be debited, means plus. Whenever there is a reduction in asset, it has to be credited. That means minus. When we come to equity and liabilities, it will be always in credit balance minus. Liability, increase in liability, credit minus. Decrease in liability, debit plus. Why equity is given as a credit balance negative? Because of separate legal entity concept, the shareholder is separate, entity is separate. Entity has obligation to improve the performance and gain profit and put it in the pocket of the shareholders. Because of this obligation, we always credit the equity. So next rule is always asset should be equal to equity and liability. And if we add total asset and we reduce this non-current and current, the liability portion, what will get, that is the net worth of the entity. That is ultimately what the equity shareholders owns. And let's see the rules of accounting in detail. The personal account, debit the receiver, credit the giver. Pay 20,000 to Rahul. We have paid to Rahul, we will receive it back. And pay 20,000 to Rahul. Who is the receiver? Rahul is the receiver. So it is treated as asset because we will receive in future. Credit, what is going out? Cash is going out. In this case, if you see the asset is increasing, asset is decreasing. Hence, the balance sheet will match. Received loan from SBI Bank 5 lakhs. We will get the cash once loans is received, debit the cash. And who is the giver? SBI Bank. And that is a liability. Here, asset is increasing as well as liability is increasing by 5 lakh and balance sheet will match. Received money from customer 15,000. But we have received money. The asset has increased, debit. From whom? Customer 15,000. So whatever trade receivable was there, 15,000 we need to decrease because we have received it. So what goes out means who is the giver? Customer is giver. Credit customer. Hence In this case, we are our asset is increasing and our asset is decreasing as well. Real account example: purchase furniture by paying cash. What is going out? Cash is going out. And what is coming in? Machinery. So in this case, asset is increasing and decreasing by 1 lakh. Machinery, what comes in debited, what goes out cash is credited. Purchase furniture for the cash 30,000. In this case, what we have received, furniture, cash is going out. Furniture should be debited and cash is credited. Asset is increased and credited is decreased in the same way. Sold old computer for cash 20,000. So we have received cash 20,000 debited and we have sold the computer credited. So asset is increasing, decreasing same time, balance sheet will match. Paid salary 40,000. Assuming that in P&L everything is nil, only salary is there 40,000, no revenue. Hence the 40,000 is exactly our loss. We have to debit this 40,000 as expenses and credit cash. These expenses will reduce our profit. Hence it's debited. Our total equity is in credit. The 40,000 will be reduced. It will be reducing the equity and the cash. Cash is also reducing 40,000. For conclude, the equity is also reducing, the cash is also reducing by 40,000. Next example, received commission 5,000. Assume that everything in P&L is nil, only commission is there 5,000, no expenses. This 5,000 is our income and profit, and it should be credited and it goes to equity, and hence credit to commission in commission income because it's income to us. What is coming in? Cash. Here asset is increasing as well equity is increasing, hence balance sheet will match. So as a summary, three types of accounting is there: personal, real, nominal. Debit, the receiver under personal, credit the giver. Under real account, debit what comes in, credit what goes out. Under nominal account, debit all expenses and losses, and credit all the income and gain. And it's the practice time. Let's learn, understand, apply the basic concept of accounting without any difficulty. Thanks a lot for joining the call and like, comment, share, and thank you.